This is guys here. We're back at it again. So today this video is going to be based upon which is the NFP, which is the United States of America's non-farm payroll, which was the occurrence of this event. It was on the third, possibly yeah, it was on the 3rd of May this month, 2024, and this is going to be a market. Unfortunately, we missed this trade. I was busy with some. I was just caught up in some business. So, but then, anyways, this just afterwards, I went to a friend of mine and we discussed about a short about it when I was discussing it with a friend of mine. It was just a Gaussian version, 16.0, right? So, anyways, let's just get to it. And this is the screenshot of the outcome that we had, right? Anyways, let's just do a market breakdown. So, I think we were on a 15 minutes chart, if not mistaken. So I'll just head straight to it. But then this is not the right way of analyzing. I think, most of the time when I trade, I really look at the price from a more narrative price time frame, which is just basically most of the time the hard time frame, which is certainly on the baseline, basically is a 4-hour chart. If you want to really understand the language behind, you want to understand the information of the price. What is the price about? What is the price used to do? What is the price's intentions? What are the vision of the price? Not necessarily the complements, which is the missions of the price or the mission of the price at that point, but the just basically the vision of the price. So, anyways, let's just start with the 4-hour chart. I think this way will serve us best. So anyways, you can look at you can see, as you perceive, that the price has been going up. It's been marking up with this nice order flow, the rally base rally, or the impulse, exhaustion, and all that, right? Until now, the price, it had this, which I call let me just put it here, right? So if you look at this here, the price, it took out this swing high, which it initiated this break of structure, right? Let me just make it this good, and it's just basically a break of structure. Break of structure, 16 bold, good. So you can see that the price, as I always say, that what is the meaning of buy break of structure? The buys, they break the structure in order to buy at a discount, right? So this the whole purportedly that's what the buyers they do to the price in order to mark it up and up, right? So the break of structure in order to buy at a discount, or buy a discount in order to mark up the price. So you can see there is this, which I'll call the last low pre-break. It's just the market inefficiency or the market imbalance. So it's just basically the delta between the buyers as well as the sellers, right? So we say it's the market inefficiency because now the market inefficiency, the semantic of that is that it is the misfunction of the price, because now you can see the price has been impossible with a more volume of buyers, so that will result the price to really function in a way that is dysfunctional. It's not functioning as it's supposed to function, right? And that leads the price to not really have its true value, right? So the cause of this those are, of course, those are the effects of it. Those are the consequences of it. It's that the price is going to lose its true value. But what was the cause of it? It's just the volume of more buyers than sellers. This is just the delta between it. So anyways, we're going to highlight that the last low break. So I'll just basically just drag it to the right. Put it there. Good. Now I'll just lock it so that I don't move it by mistake. So you can see later the price, what the price later did. It just went to the upside, right? It came out to close, trying to close all of it. Unfortunately, left that, right? The upside, it went to the upside, break of structure, rally base rally until it created that the last swing high of the price. That's the price level that the price touched. And later it dragged to the downside, creating this demand zone as a zone of a flip zone. So this is just basically a flip zone. So understand, if you look at the shorts, it took me like 12 seconds, 12 to 13 seconds to discern where the price is going to, because this is NFP, right? The non-farm payroll. So, but then I just want to give you the narrative of the price really, of the whole market structure, because this is not a short, it's a video which might span to something like 30 to 45 minutes. So I just want you to understand, you know, the price play, the intention of the price, why this happened, why the price now it later went to the upside, what's going to happen. You get it? So let's just get to it, and I'll just leave it here so that I don't make it long. Oh, it's a flip zone. I'll make it 16 again. I'll leave it like that. So you can see the price later, it violated this demand zone, right? Though the price, you can see it broke the structure, and this was the initial low, right? Not taking that into consideration, but that's the high as well as the low, lower low, and then that's the higher high, that's the higher low. It never took out that, but there is this violation of a demand zone, more like a continuation demand zone, of which I might consider that as a continuation demand zone, and this as a reversal demand zone, right? Whole of this. Good. So what I'm going to do here, I'm going to be doing this. This is a break of structure. This is a change of character. Apologies, you know, I'm a difficult person, honestly. You know, by person, I'm a difficult human being. I like precision. That's the reason why I was dragging that, you know. But anyways, that's pretty much it. So this is demand zone. It was violated. It was in breaking. It was in disrespected. It is violated. So this is not really a proper change of character. And though the price never took out the swing low as yet, right? And later it did, and also close and form this close this the last high pre-break, which is the market inefficiency, which is the negative imbalance, right? And later the price tapped the nearest supply zone, went to the downside, but it couldn't take out this last low, but then it went to the upside in order to close this one before you can just track to the downside, right? So you can see March on gold. March is I think it's pretty much the same thing that happens really to the Nasdaq. You know, I trade mostly the gold. I trade mostly only two instruments, which is gold and Euro USD. Good. So this is the flip zone, right? The price later went to the upside, and creating this is a reversal supply. This basically means this is the demand zone of interest. That's the, I can take this, I can take that, because you can see what happened. There is a rally, base, rally, Having this never took out that, but having a break of structure and a change of character, and the price never came back into the zone. Yeah, so let me just drag it to the right side. Until here. Good. Yes, having that break of structure, change of character, demand zone, flip zone. This is an invalid change of character. Do I understand that it's more like it took out this low, right? But there was just a price segment from here up to it was a rally based rally, so it is invalid change of character. This is a valid change of character, right? So I will understand really if the price here it closed below, and then now for me it will make sense, like what happened here. So now I can put up my CB1 method, I can put up this and that, right? So anyways, we have the zone of the flip zone, right? Again, now we have this supply zone, we have above it, we have this which is pretty much far away from it. It's a 4-hour chart. So now we have this supply zone, and now take into consideration that the price already has a candlestick before having this, which was targeting to close this last high pre-break, last low pre-break, last high pre-break. When the price marks down, drop base drop, it has the last high pre-break. But the price, when it's rolling up, is marking up, then it has got this last low pre-break, because the price surpasses it and later comes to the price surpasses it and later comes high to it before it can supply more. Good. So you can see the price after closing that went to the nearest supply zone, and then it was just a little bit fractal. This means the price is moving within a certain amount of pips before it can reverse to or just change of character, right? Most of the time is when it has got to change of character, as opposed to trending with the price, right? Then I'm going to high importance again. There's other things that before we have the events on payroll events, they were printed by the price. You already have this market inefficiency closed, change of character already formed as well. So I'll just change the line format and I'll just make a break structure. Good. So from there you can see that this is what we will be targeting, right? So I'm going to highlight that as well, which is the supply zone of the reversal supply. You can see already the price here respected it, but that was later after the price has played the NFP. But anyways, no problem. Let me just rock it, and that's what we are having. So having this price being printed like this before we have anything looking like that, right? So you can see that the price's intention is to get to this point, but that's just what we see from the hard time frame narrative. So when we go to a 2-hour chart, and I would like to go closer to this, you can see there's a last pre-break here. So I'll just highlight everything as possible, as long as I don't congest the charts and confuse myself. Good. Good. So that's what I have. Good. So we know that if the price is trending, and then what's going to happen, and having this the market inefficiency positions, so what's going to happen with the price is that it won't really respect the nearest supply zone, but instead it will just close the inefficiencies and just the market gaps, the market imbalances, and then just go to the downside, right? So you can see that this supply zone here it's not really because of course now it's more like I'm speaking more of after the NFP has played, right? So let's just wait with that. Let's go to a 2-hour chart, and that was the last low pre-break, having it here and having it there, which is a little bit good. And then I think I was quick to go this to the 2-hour chart. As I said, right, just recently, that when the price is trending, the price, it will find it difficult to really respect with the net instrument price action value. It will find it difficult to respect the nearest supply zone or the supply zones that led to the breakup structures in order for the suppliers to sell at premium, right? But instead, the price, the just the price action, what's going to happen is that it's going to respect the nearest, it's going to respect the last two pre-breaks. I mean the market inefficiencies. Of course, in this manner, it's going to be the less high pre-break, right? The very same thing applies. You can see the price later went to the downside. So I have this, just the CB1 method. I'll just show you right in a bit, right? So now what later happened is that the price, after it tapped here, it went to the upside. But you can see that the price, its intention was to close this last low pre-break that it engineered on its way down. So this momentum candlestick, it really shows a huge supply of buys, that huge volume causing this market, this delta market dysfunction, right? So I'll just do it again at this point. Clone. I think that's far, right? But then no problem. I'll just reload this. I'm going to reduce it. So this is 4-hour chart. You can see the price went to the down. That reversal supply, it led to the breakup structure. Along the way, it had this gaps along the way. You see, right? And you can see the price, this last high, it tapped within this. Perhaps it might be 0.386, if not mistaken, of this whole market inefficiency gap. So the 1, 2, 3 negative imbalances. So the price later went formed this market breakup structure. Later went to the upside, as an exhaustion. Later went to the and it formed that CB1. Good. So after it tapped this nearest demand zone that formed this CB1, it tapped it, it went up, and then now on its way down to this demand zone, the price formed another market imbalance, so the market inefficiency. So it has got to close it and go to the downside again. And you can see here the price had this market inefficiency. The price has got to close it and just went a little bit to the up, right? Price react from this the market imbalances zones. Not necessarily that it will move with a huge amount of pips. No, it will just react. That's it. It will just react. Those, though I understand if you put them in contrast, the supply zone or the demand zone, which is the S and the barrier zone, versus the market efficiency zone. Of course, now it depends, right? I wouldn't say really it depends with the execution of the trader. I would say it depends with the market structure, right? So because I might answer as of this, the other one might answer as of that. They might profit from here and respect this demand zone. I might profit from here until I close this last low pre-break, which is the last low pre-break, right? So I won't really say, okay, of course we might give it a hand, right? That it really depends on the execution of the trader. How do you trade it? You might see this and be like, the price is going to react, but not really. It might come to this. Of course, this is too low. The price, might come to this zone, but we're having a lot of confluences at this zone. The demand zone, right? The last low pre-break, the CB1 method, 3 of them. man, what's going to happen is that the price is going to be jacked to the upside. Good. That's a good inference from the good basis of reasoning and evidence. Good. So as for me, I might answer as of that, because I'll be looking at the break of structure, and you have got to remember that there was this, that the price formed, right? Good. And the price really reacted as of from that. So I'll remove it just from the right side. I don't want it to be too congested. Remove from the right side. The last thing applies to that. Good. So the price reacted from that, right? No problem. So even this one, the price reacted from it. Good. So, but then be looking towards this movement. So what I did, I was on a 50-minute short. Good. And on the 50-minute chart, what I've discerned, it is that. Yeah, I'll do that. Good. This, it is the NFP, right? And in mind you that we had that above supply zone that I was anticipating that after the price taps in there, it has got to deliver the orders up to here. So this means we're anticipating that the price will be fractal until it gets to this point, all that points. And you can see there's a fresh demand zone, as well as this a fresh indecision candlestick demand zone. Good. So what I've discerned from this just right away, because this is the time frame that a friend of mine was in, right, or was at, the grammar vocabulary of the English principal literature. So for indicator. So what happened is that I got to perceive that there was a change of character at this point. I got to perceive there was a break of structure, and the price was that impulsive. I got to perceive that the price, it later went to the downside with this and created this. It went to the upside. It never took out the swing high. What the price later did is to take out the swing low, forming a minor change of character or just a break of structure. Later the price went to the downside. I'm unable to take out the swing low. It went up to form a flip zone. It broke it with the momentum, causing this market dysfunction, leading to the price being at an untrue price value, and heading to this demand zone. That on a 2-hour chart, I saw the CB1, and I saw that the price after tapping in here, it will go up. Good. So let me just go to 2-hour chart so that I show you this, so that we can at last be on 50-minute chart. So I have this. I always move from a 4-hour chart, 2-hour chart, 1-hour chart. These are the hard time frames. 30-minute chart for me is an intermediate time frame. It is between the two extremes. The 30 minutes is between the two extremes. The extreme being the hard time frame, which is the price narrative, right? The price narrative, and the smaller time frame, which is just basically the price complements. So this means you're not really trading the concept behind the price, but what is the vision of the price, what is the narrative of the price. You're just trading the complements. I see a resistance, and then I sell from it, the support, and then I buy from it, and that's it. The complements is just basically strategy evaluation matrix, right? So you can see this demand zone. There was a little bit of a break of structure, and you can see here is the same thing. No, I don't want to be dragging this. There was a engulfing candle here. I call it the market break concentration stage 1, which I say in theory, in a engulfing candlestick on a hard time frame. And a smaller time frame is what exactly it is. A sentimental price trend shift is where you will see a market structure creating a break of structure and a change of character. So this means even here, if you go to a hard time frame, you'll observe that there's an engulfing candlestick, a market break concentration stage 1, an initial break 1. Good. or one-on-one. So there was this demand zone, there was this last pre-break, and there was this CB1 method. CB1, which is the candlestick break 1, and is the methodology. So the CB, which is the candlestick break 1, it is the first candlestick, which is a supply to the structure. This is parallel. This candlestick, which is a supply, is parallel the last candlestick, and it's not for the use. So this means as from here, right, so we can buy at this point. So I'll just show you something, right? We can buy at this point, and keyword break. The way I buy with the DT constants, we buy at the swing high because we want to be part of this of the people who will be tagged within, will be tagged into the market, will be will be executed when the price is trying to cover up the so-called the last low pre-break. I mean, when the price is trying to cover the market inefficiency, which is the last low pre-break. So it cannot be risking 61%. There's got to be something here. Although I don't risk 4 pips, 4.67 pips, or 46.7 handles, so ticks is not good. For me, I don't really trade it. But that's the way it goes. If you want to trade it, that's how you have to go by it. You don't put it here, which is the swing high. You put it on the momentum close, or the momentum open. You put it exactly there, and then that will be your holy trade. Right? So this means before even the price gets to that point, because you can see the price went to the upside and then it takes you out, and this means you lost. And that's the trade. That's how we were going to trade it. So that's a loss, a pure loss. But you can see the price really respected. There's a high liquidity at this point. The level at which the price is in high demand or supply. Here, in this regard, is in high demand. It went to the upside, rally base rally, and rallied up. And then later, the price here, it is efficient. It went to the downside. Good. So no problem. So now we're going to go to a 50-minute chart. I just wanted to show you why that it was a buy at that point, why this was a buy. Good. And then now we have this. So what I saw this change of character. These are the first and foremost things that I observed. Let me just put my instruments here, my components that I'll be employing for the analysis. Put it here. Okay. Third log, change of character, C, 16 points, bold, good. And I'll just clone it. Instead, I'll make it a break of structure. Right. Yeah, let me just leave it like that so that we don't spend more time, right? And then, so here goes the play, right? So that's what I've discerned, right? And the price later formed all of that. Let me just put it well, man. It doesn't sit right with me. I'm sorry, guys. I'm gonna put it in a neat way. I'm gonna put it there. Again, put it here. Now is why I feel good. I absolutely feel good. I have to clone it. Just a minor change of character. That's what I would emphasize it as. A minor change of character. Minor change of character. 16 MC, no problem. Same thing applies to this. Lock. Good. And here, what I got to observe is that the price here, right, there was a there was a there has got to be a supply. There was a supply zone which is parallel to the support this at this zone. So you can see that the whole of this chunk from here up to here is a price segment. So I try to really check if there's anything that might be the of market inefficiency or a supply zone parallel here, and I found see the whole of this, it has got to be covered, because on a hard time frame it is what? It is the last high pre-break. So when I observed here, I was looking at this. I'll just drag it like that and drag it like this. So you can see that this supply here is not really parallel that. So if you put it nice and you put it like that, let me take it up just like that, you can see it is out. So this means it won't hold. It won't hold really. So even if you try to take this, because even though I know that I won't take it, I will only use the red candlestick as a supply zone if there's no white candlestick, right? And then I was like, okay, no problem. I see another last pre-break here. I'll just put this, I'll put that can box, and I'll just put this, right? Put that, put it like that. Good. So you can see that now within this can box, which is the rectangle, which is not really the can box. This is the can box. This is just the rectangle. So within this, there's this first touch and second touch, and it's that. So it is enough as a complement. So for me, this it was the entry. This it was the entry. But keyword break. What's the most important thing about this? The stop loss. That's the most important thing about it. So where to put the stop loss? You always put the stop loss above the reversal supply or the continuation supply. If it is a continuation supply, on a 50-minute chart, you're going to get easily hit. So you'd rather use the reversal supply. But if it's this like that, and you won't put it above the reversal supply, you don't have any choice but to put it above the nearest, continuation supply, which is that, right? Good. So this was the GAN box, and I can see this and that. So you can see it's that of type B entry method. That's what I call it. It's MSA type B entry method. MSA type B entry method. This is the very same thing that we had on the previous video. We have the supply parallel the resistance, the price drag to the downside. When it taps, it goes to the downside, right? So here is a B type method where the market efficiency or the imbalance that was printed on the charts, it is parallel the supply on the left. That's where the volume started to kick in order to break here, right? And then boom to the downside. No problem. So when we get to this point, we need to react. So now where to put the stop loss? And I can see that above it, because this I won't really take it into consideration anymore. I won't really put it into consideration, only this. So above it, there's a supply zone. And this supply zone, the only way I could have entered off it is to use the, as always, use the shadow of the previous candlestick. This is the supply zone, right? And then this is the supply zone, and here it has got to be the entry, but they are parallel to each other. So I have to use at least this shadow here as the entry method or the entry point. Good. And that's my entry point. That's the supply zone that I'm taking it as just for the consideration of a supply zone. So I'll enter here, and you can see it's more like 50% of it. So it's good. It's good of an entry. Then I put it just there, risking only 34 pips, or 34 points I meant to say, 3.46 pips. And I risk only 25 minutes at the time, so I won't really put it inside. I'd rather make sure that I use less lot size so that I can cater with good. And now where is the take profit? Mind you, we know this is my problem, people. So instead of just explaining the non-farm payroll, how it happened, I'm explaining everything. But anyways, it's just a learning channel, so I think even this is all value to you guys. So ways to take profit exactly at the bottom of this. Good. And then I'll just leave it like that. It was 12 point something. I really forgot, but it was 12.48 points, something like that, if you're not mistaken. So we lock it, right? We lock it. And then now we focus on the NFP. Good. There's something interesting. The price haven't gotten to this point. I repeat, the price it hasn't gotten to this point of taking profit. What it did after it tapped in here, which there's something interesting if you further tap in and try to really check what's happening. Mind you, it is a 50-minute chart. Mind you, that's where we can employ our MMA. So that's the reason why I say, you see, if you put this everywhere, it always plays, and it's not a made-up thing. It's always there. The way I apply this here will be the same way I applied it there, right? So there's there's nothing made up here. So anyways, be careful. This is not I haven't took the trade. I haven't took this trade. It's been a while since I traded gold. I was on Euro USD, and now I'm currently on what we call this gold on NAS 100, which is the Nasdaq. Good. Right. Remember, we had an entry at this point when we was on a 2-hour chart. So if you look at this, you shall observe that it is the MMA. It is, and that MMA is good because it is within the sentimental price trend shift every year. That's the most important thing. Good. Good, right? So first things first, you can see that the price after having that to the upside, first things first, it is a demand zone, and previous to it, there's the candlestick that is preceding this demand zone. It is this. We use the swing high of it as an entry. It's not a made-up thing, man. The very same thing applies here. You can see I use the previous the shadow of the preceding candlestick, and here you can see that this one is just of the same to it, and I cannot use that. I use this purportedly to be dragged into the price earlier before the price taps people who are in here. That's the reason why I do it. So the very same thing, I want to be tapped earlier before people who are waiting for to be tapped within this demand zone. Though it's not fresh, I understand it's no longer a fresh demand zone, but then I trade it with the concept of the MMA, which is the market movement of adjustment, and all of it is mediocre, but then it stands for something, right? Anyway, it's on a different video, that one. It is a demand zone, went to the upside, the break of structure. Before we have the break of structure, price impulsively went to the upside. A little bit of a change of character here. Anyways, I just came back, tap into this demand zone, close the last low pre-break, price break the structure, boom to the upside impulsively, but fractally impulsively. This is efficient. Good. Later, the price came to the downside impulsively, so leaving this market imbalances to the downside, right? And you can see, okay, good, to the downside. So I have the demand zone, I have the CCST, which is the BAC. This is CCST, which is the contract confirmation swing tip. So this contract already at this point is being confirmed, and this is just the tip, and this is exactly where we enter, right? So I don't want to be stuffing so many things here. That's just pretty much it. So that's the thing, right? So I was waiting for the price to really get to this point, but after the price got to this point, tapped into this entry, went to the upside, we had the change of cavity, the break of structure, and now interestingly, I'll just remove the bigger guys, because now the chart seems too nasty. The last pre-break here, it has got to be taken away. Okay, no problem, I'll just remove it in a moment, right? This is the break of structure, right? And then the break of structure, the change of cavity, and you can see this is the, I'll just clone this. Good. Great. Just above that, right? Above the break of structure. So what I'm looking for is any supply zone that will lead the price to reverse, right? That will lead the price to reverse to what point? To this point specifically, right? And also be careful, because already the price is printed another thing here. So this means now I can take the profit not with respect to this, but with respect to what the recent price market structure is printed. The price market structure that has been printed. What is the take profit of it? That I can use as a complement to take a profit at an extended version of the price level zone, right? So now what happens is that since we're on a 50-minute chart, I cannot use the SMK ratio valuation matrix, so I can use the net instrument price segment value. And mind you, in here, this is the last loop, this is the last high pre-break. Good. So within here, the zones, I'll just reduce this to perhaps 3 is okay, right? So I'll just clone this to highlight the most important zones, right? Let me just put it here. So let's use it. This is a price segment from here up to there. So let me employ my Fibonacci. I'll just put it here up to that zone. Good. Good. So we have the 50%, which I don't sell at equilibrium. There's no way. So I only sell above, which is the 70.5%, 79%, or the 88.6%. Good. So I want the zone which is within this centimeter price trend shift, and this is at the level. Yes, it holds most of the time, but no. For me here, it won't hold, because you can see this supply is the one that led to the break of structure. So most of the time that it might be used, because it's parallel the last loop pre-break. The last loop pre-break the sentimental price trend shift level. This is the sentimental price trend shift level, right, within this area, right? And then the problem with it is that it's not on the correct price level for the premium zones where I can sell, like the 70.5, right? So you can see the ones that hold 1, 79% to the 88.6%. So this one here is it's totally out. It's already out. So I'll just highlight those. I have that, which is a zone between the key levels, right? And then I have this. So as I said, this is just totally out, right? So now I'm left with this. So most of the time, the zone that holds most of the time is a zone that is in between the key levels, 88.6 and 79, 79 and 70.5. That's the most heavy zone. Second, since both of them, they're just barrier zone, which is just basically a supply, right? A barrier zone is just a supply or demand. So the most heavy demand or supply candlestick, it is an indecision candlestick. This here, it is an indecision candlestick. This here, it is a 38.2 candlestick. Good. So now already we know, right? So I'll just take this out, and then I'll take this out so that the price, the chart just please remains clean, right? And then you can see now that from here up to there on a 2-hour chart, what is that? Exactly. That is, it is absolutely the last high pre-break. It is the market imbalance. So it has got to be filled, right? Good. So let's close it. Now we know that it is within here. Let's just close it. I just want the chart to be clean. It's not a sin to do that. So anyways, that's pretty much it. Good. So now after having that, and we know that this indecision candlestick is greater than this in the momentum that it holds to reverse the price or continue the price, what we need to do is to be you just need to it draws back down to personal preference, right? As a trader, what really do you prefer? But you need to really be careful here, guys. You really need to be careful, because most of the time people that will sell at this point and be like, no, I don't want to be left I don't want to be left behind. The FOMO. One of you who knows the FOMO, which is the fear of missing out. So you can put it here, or you put it there. It's not a problem. So even if we had another one, which is another perhaps indecision candlestick, you have to put it above it. So in this case, I'll just put it above here. Good. Right? And then now we have the whole holy grail of where the price will tap. And now there's something that I did not emphasize. There is something interesting here, which is the liquidity. I always wanted to do a video just specifically for the liquidity, right? Because liquidity is something interesting, man. It's like the market imbalance or the market inefficiency, whatever you call it. So the liquidity is just basically a price level at which the price is in high supply or demand. Most of the people are waiting for the federal touch at this point, right? The phantom people, the falcony, but not to disrespect, it's all love for everybody. So anyways, in the advanced supply and demand, or just the DTE concept for this, as well as the supply, just basic supply and demand traders. This is just basically a liquidity. So a friend of mine found indicates he trades the SMC, the smart money concept. He'd be like, this is a static, or the static liquidity. So for me, with the advanced supply and demand, or basically the DT concepts, what I say is this on the baseline. Liquidity can be formed in three ways. Number one, it can be formed as a byproduct of the MMA. After this happened, you rename it to PP. Why PP? Predatory pricing. I'll explain that later on a different video because it's going to take time. So this means now it is a liquidity and it has to be swept. Good. The second, it is the Asian session. The third, it is an equal highs and equal lows. This is equal highs, double equal highs. So good. Good. So now after we have the holy grail of it, what the price is going to enter, it's going to answer as an entry, and where it's going to be delivered. Or even though we don't have the specific points, we need. So the H4, the reason why I go here is that I want to see firstly which I want to see, or matter of fact, I want to validate my entry level, and I want to validate my take profit level, which I said it is going to be at this point, because here it was on a 50-minute chart. I'll leave it like that. Here it is on a 4-hour chart, which is going to be momentum based, so I can just put it there, or just take it with the this one, because it might not make sense if the hard time frame I want to put it the take profit before the smaller time frame take profit. Good. So now let's validate the entry point. If you want to validate the entry point, here is what you need to do. You have to check, do you have the supply, your entry point, is it within any supply zone in a hard time frame? Yes. Can you please highlight it? This is not only my supply zone, it is my reversal supply zone. I'll do that. I'll do this. Okay, it's good. I'll just lock it, and that's pretty much it. So we check, is this within the supply zone? No, not even close, man. Let me do this. Not even close. Just add it. So this means now this is going to be omitted. It's going to be omitted. Let me just put X. I don't want people to be thinking things. Anyways, let me just put X, or just a question mark. Oh, let me just leave it at that. So, and again, remember, as I said, that the indecision candlestick is the one that holds much of the momentum to reverse or to continue the price. And when I look at this, the indecision that is exactly within the hard time frame supply zone. Because what you need to understand is that the price needs by utmost to pass nearest supply zone in order to get to the hard time frame supply zone to react from it. You get it? So that's it. So now we found the entry point. So now this means we can go to a 50-minute chart to put it exactly at it, so that we do not get confused. Right, you can just put it there. Since it's just the supply zone, it's not MMA or MSA, we're going to take the swing low of it, of just this white candlestick, which is the supply zone. And again, now it depends with the type of a broker that you use. 1.74 pips is okay, right? But sometimes you need to be reasonable with this. You cannot be risking 5 points, which is 0.5 pips. Nah, man, it doesn't make sense. Most of the time, we don't really utilize the ECN accounts, the electronic, type accounts, so where the spread will be low, right? Because sometimes the price it might be 9 points, and to only find out that the spread takes you out, right? And then now people, we have our entry, and that's it. That's pretty much it, guys. So how much do we have? We have 20.93:1 risk reward ratio. So anyways, guys, I really hope that you enjoyed the show or the video. I hope that my content will make you eventually a more profitable trader. Matter of fact, I hope, I really believe that sooner rather than later. Anyways, catch you at the other end. It's DT Traders at this point.